Today we're going to be looking at how to download financial data from Bloomberg. Now first thing you need is a company, so I'm going to choose H&M. I'm going to select the security, and then when I see the screen I'm going to choose Financial Analysis, or FA. Here you can see all the financial statements of the firm, and they come in multiple different formats. So you can see both standardized statements and also as reported statements, which are slightly different because some companies report their financial statements in their own way, and Bloomberg allows you to standardize it for you. Now to export these, you have to go to the top menu where it says Output, select Excel, and then select Custom Report. Now here we want to select the income adjusted, the balance sheet, and cash flow standardized. Choose these three options, click Add, and then just above this field click on periods and choose 6 periods as the setting. Once you've done this, click on Generate at the very top, and everything will be exported automatically to Excel. It might take a while to actually load, but it will get there in time. Once it loads in Excel, you'll see that these numbers are actually being fetched in real time, which might be slightly annoying if this happens every time you open the file. So once you have a look through to see what it looks like, the next step, what I would recommend to do, is to copy all of these contents and paste them back as values so that the formulas are being replaced by hard-coded values. That way it's much quicker to open it next time. Now to do this, or to select the entire sheet and paste it back, go to the area between A and 1 on the top left hand corner, select that selects the entire sheet, click on Ctrl C, and then paste values and formatting. Do these for all the 3 sheets that you see, so both the income statement, balance sheets, and cash flow statements. And again, if you don't like using Ctrl C, you can also right click once you've highlighted the entire range. So as I do now, right click, copy, paste values and formatting. Now the second part is your ratio calculations, which you'll be handing in as your homework. You start by calculating return on assets by taking net income divided by total assets. Note that total assets for 2011 is in column D on the balance sheet. Now return on equity, on the other hand, is net income divided by total equity. And again, total equity will be in column D for 2011 on the balance sheet. The next ratio is the gross margin, which is your gross profit divided by revenue. We then have the EBITDA margin, which is your EBITDA divided by revenue. Next is the EBIT margin, which is simply your EBIT divided by revenue. Finally, we have the net profit margin, which is your net income divided by revenue. Then we have the asset turnover, which is your revenue divided by total assets. And again, make sure to select total assets from 2011, which is in column D. We then have the fixed asset turnover, which is your revenue divided by net property, plant, and equipment. Next is the accounts receivable turnover, which is your revenue divided by accounts receivables and notes. We then have the current ratio, which is your total current assets divided by your total current liabilities. Your quick ratio, on the other hand, is your cash, cash equivalents, and short-term investments plus accounts receivable and notes divided by current liabilities. Now, cash from operations to current liabilities is simply your cash from operations divided by current liabilities. Average days payable outstanding is your accounts payable divided by cost of revenue multiplied by 365. Now your total assets to total equity is simply your total assets divided by total equity. And then finally, total liabilities to total assets is your total liabilities divided by total assets. Once you've done this, you can highlight all of the formulas that you've entered so far. So highlight all the fields that you've filled in so far. Then go to the bottom right hand corner and just drag it to the right to fill out all the other fields automatically. Now I did forget to calculate inventory turnover myself, but you can do that yourselves by taking the cost of revenue divided by inventories. And that's it.